Hello and welcome to our second video on support and resistance, what it is and its applications. Support and resistance is a very powerful and actually one of the more basic and fundamental versions of technical analysis in Forex and many other tradable commodities such as stock. Support and resistance is levels of price that are difficult to break for fundamental reasons or technical analysis reasons. The difference between the two lines is essentially the side of price that they are currently on. So you'll see the resistance lines here are labeled in blue and the support lines are labeled in green. And the only difference between the two is resistance is above price. It basically resists price. As price comes up to these levels, it tries to test them or break them and is unable to do so. As you can see by this graphic here, a red line representing our price, we have come up to this level and touched it a couple of times without breaking it. Support is the exact same thing, but it's on the other side. Price comes down to a certain point and tests it a couple of times without breaking it, creating a level of support. As you can see, whenever you combine the two together, you usually get something along the lines of a breakout box, is what I like to call it. And there are a number of different ways to trade support and resistance. You've got breakouts, which is essentially creating these exact boxes here and attempting to trade on the break of support and resistance. You've got what's called counter trend trading. It's people who build systems around bouncing off of levels of resistance and basically selling down to the level of support. So we would have 1, 2, 3, 4 different trades in this particular back and forth box, as we call it. And many technical analysis traders actually use support and resistance as strong exit levels. The purpose of support and resistance is basically to try to identify where a price is going to go based on where it's been and the patterns that it creates. By being able to identify levels of hard support and resistance, you add a whole new depth to your trading, and you're actually able to use this technical analysis tool to help you in different types of systems, no matter what the style of trading is. So now that we've kind of seen how resistance and support can be drawn on a chart, like it encompasses price and what it can do, let's take a look at the different types of support and resistance, how to identify them, and how to use them. First, let's look at what makes up a level of support or resistance and go through what makes a level of support and resistance stronger or weaker. You can usually tell the strength of a level of support or resistance based on how many times that level was tested or touched without being broken. Starting at the bottom here, you can see there's a level of minor support that was only touched once, but it is a very important level. As you can see, the market moved down and reversed at this level. Now on the hard right edge of the chart, let's imagine that this is the far right edge. We can't see any of the rest of this. You can begin drawing lines of minor support fairly early. Whether or not these lines are tested again in the future says if the level of resistance or support is going to be strong. And as it's tested and touched more, the stronger it becomes, the more effective that level becomes when it comes to breaking out or predicting where price is going to go. As you can see here, we have a level of strong resistance. If you remember, resistance is resisting price from going up through this level. You can see that this level was touched twice. Okay, so this is stronger than the minor support that's down here. Once again, support is supporting price. Basically, price cannot break below this level. So we've got our one level of minor support, and we've got a stronger resistance level right here that's been touched twice. If this line were to be extended out all the way, you can see that price, when it breaks this level, has a tendency to continue up or down, depending on its direction, and in turn can be used to identify when markets are going to break out and can be used to actually place trades based on these levels of support and resistance based on how strong they are. If you move along a little bit more, you can see that as this level of resistance is being built, as we are touching this and moving back down, we're building small levels of minor support as well. Once again, the more times that a price touches a level of support or resistance without breaking through it, the stronger that level of support or resistance becomes. Extending this line again, you'd see that once we went straight, if we were to go straight across with this line, you would see that as price actually breaks through this strong level of resistance at a very quick pace, once again it continues upwards fairly quickly in the direction of the prevailing trend. Not only can you actually use these as breakouts, you can see that you can, based on the level of support and resistance and how strong they are, you can tell when the trend is beginning to reverse. So you'll see back down here, our first level of minor support is drawn whenever we have a nice level of rebound here. We draw a level of minor support, and as our levels of strong resistance are drawn with the different testing and touching of this line to make it stronger, we've got strong levels of resistance as the market is moving higher. And this is perfect for breakouts, as we've seen, as the stronger the resistance is and the prevailing trend is up, then there's a high chance that it's going to break these lines and give you really good unique trading opportunities. But if we were to look up here at the top right hand of the screen, you'll see that we are beginning to draw a line of major support that's been touched multiple times. Looks like 1, 2, 3, 4, 5, 6, technically 7 times. This really heavy area of major support is being drawn. And this level of minor resistance up here that we begin to draw, if extended out, would create a really nice box effect. And it's beginning to be a telltale sign that this whole upwards trend is beginning to slow. So let's take a look at some real world chart examples of this in action. First thing we have here is the exact same sort of situation that was mentioned previous. We have a box of resistance and support created on the pound 15-minute chart here. And you'll see this level of resistance. If I were to scroll the chart back a little bit, as we're moving forward and these levels of resistance and support are created, okay, you'll see that this level of support has been touched. 1, 2, we broke it a little bit, but we're generally looking for a really large break to do anything with it. So 3, 4, came close to it 5, 6, 7 times. So as this is moving forward, we're drawing this line of support and using it as a reference tool for when the market breaks this, if we're going to be doing anything with it. So as you can see, we weren't really able to draw our level of resistance until right around in this area, after this this market section right here had broken above. And so as it's coming down and we touch this level 3 times, we're able to draw this level of resistance. Now, a lot of people ask me, how many times must a level peak, or basically show its level of resistance or support, before you can actually draw a line? As before, you could draw a line technically at any point in time, just so long as there is a peak or a valley there. And how many times it's touched basically gives you its strength. So by this time, we've got a level of support that's been touched 7 times. We've got a level of resistance that's been touched 3 times. So we've got a really nice box formation going on here, and we know that the price can't stay in this box forever. There's going to be a certain time where it's going to squeeze down and break out of the level of support and resistance. As we see, as I start to scroll the chart this way, you can see that this definitely held true. The support, once broken, proved itself to be very valuable in taking a trade, because as it was broken, we've continued down and continued down. And so quite literally, price was bouncing between these two levels before deciding to break out in one direction. Now, something else interesting that support and resistance is very good at, and is actually often overlooked, is quite often areas of support that have been broken usually become levels of resistance. So we'll see here this level of support that I've drawn. And once again, I only drew this level of support after it had been established, after it had been tested a couple of times. Did I draw this level and consider it something to watch? After it was broken, you'll notice that for our initial fall, it would be a good idea to actually take a trade such as this, but after the initial fall, price actually came back up, and now we have a level of resistance here that's been touched a couple of times before breaking above it. See, so that's a very important thing, that levels of resistance and support should always extend past where you think they should go, because they usually tend to create levels of resistance as well. Now, why is this? What makes support and resistance work the way it does? Generally, it's a case of supply and demand and market psychology. So at support levels, for example, the number of buyers generally exceeds the number of sellers and pushes the price back up. So we have levels of what we call them support and resistance because it supports price and resists price. But more often than not, they're levels of market psychology and supply and demand. And the reason why this back and forth motion works quite well with horizontal lines of support and resistance is when the market is a bit unsure about what direction it needs to head in terms of the prevailing trend. So generally, large breakouts like this are the result of news releases or new material information that's been released that causes the market to not be so undecisive. It causes the supply to outrun the demand or the demand to outrun the supply, and that's where these breakouts come from. So levels of support and resistance, horizontal levels of support and resistance anyways, are almost always due to the that the market is undecided and has the awesome side effect of giving us these nice levels that price can't seem to break through, which gives us these unique trading opportunities. Now, there's more than one type of support and resistance. We really only covered horizontal support and resistance, and that is lines that you can draw horizontally on your chart or any sort of instrument that tell you when these levels of supply and demand or psychology-based numbers apply. But there's no hard and fast rule that say that lines of support and resistance need to be horizontal. Let's take a look at this example here. And this is the US Canadian dollar. It's on a 1-hour chart. And we can see that there is definitely a line of resistance and there's definitely a line of support. Our line of support wouldn't be drawn until it's been touched 2 or 3 times, as stated before. And as it's being touched more and more, this support line becomes stronger. It becomes more relevant. This angle of resistance, or trend line resistance as I like to call it, is built in the exact same way, except it's done with an angular line. So once 2 points have been established, basically this line of resistance here, from this peak to this peak, we'll begin to see that we have another unique opportunity. Price will be squeezing down between these 2 areas until it comes to a point. Usually this point, fun enough, is pointing at some sort of news release, some sort of major event that the market is actually waiting on. It becomes quieter and quieter as the participators in the market are waiting for something to happen. And usually this happens with a pop in one direction or the other. Once again, this could be a news release, it could be some sort of political event, it can be almost virtually anything that pushes a currency in one direction or the other. But this is usually indicative of the market participators narrowing their focus down to a certain point in time. This certain point in time just so happened to cause the market to move strong enough to punch us through our support very quickly and allows us to once again have a pretty unique trading opportunity. Now the interesting thing about this setup is you'll notice that this is a very well-defined level of support, very well-defined level of resistance. So there comes time where there are many traders who are actually watching for this point to happen and are all going to be attempting to take the same kind of trades at a time. This is where that last point of previous support becoming resistance becomes very, very handy. You'll see as this economic event or whatever this was that pushed this market all the way down through our hard level of support, creating our trade opportunity, you'll see right soon after, everything kind of went a little bit haywire. The market started pushing back up real far and then back down. That is usually the market participators, everybody who's trading currency, all the banks that are trading currency. all the different economic events fighting with one another. So it's basically the whatever fundamental reason why this currency, whatever this was pointing to, why this currency pushed down as far as it did, all of the people attempting to take profit and jump into the market to ride this down cause it to whip back and forth really fast as supply and demand gets a little bit skewed. Now, usually this results in this happening right here. You'll see that this level of support became a level of resistance. Okay, so as the market pushed back up and we touched our level of support, we know that generally speaking, this tends to happen quite a lot. So a really good strategy, and something that a lot of people employ, is to not necessarily trade on a break, when especially when price is narrowing like this to a certain point. People tend not to trade on the break, but they wait for it to come back, touch our level of support to create a new level of resistance, and then continue down as the people begin to get into the market or out of the market. The market kind of settles and then goes in the direction of the original break. So you'll see this will actually continue down quite a bit, which makes this a really good trade to get into initially. Now, if you wanted to go a step further, and you can't do this too much, because if you do, then you would be over analyzing the market and possibly using lines that are of no use. But you'll see this previous level of resistance still holds true even after our level of support is broken. So as the market moves down, this level of resistance still hasn't been broken yet. This is still a valid level of resistance. It's still pointing in the direction of the trend. It could still be broken, which is the great thing about having a horizontal line and an angled level. See, as we come back down, and this initial pop plays its way through the market, and the market starts to pull back, you'll see that this happens again. We've got this whole level right here where resistance, or this level of resistance, is still a valid level of resistance. It's still being touched. And the more it's touched, the stronger it becomes. So as we come up here and price has a difficult time pushing through this level of resistance, we're waiting for it to push through. Once it finally does in this area here, then you'll notice that once again, this level of support comes into play. We still can't punch above it right here. And this level of resistance becomes support. Yeah, no, it sounds like a lot. It sounds like I'm throwing a lot at you, but if you just think about it this way as a rule when trading with support and resistance. It's very important that once a level is broken, do not erase your lines, okay? Because these lines are still valid until the market moves away from them completely. You'll see that this level of resistance held and became a level of support, just as this level of support held and became a level of resistance more than one time. Okay, so we've covered nothing but horizontal support and resistance. We have an angular version of support and resistance, and there's a couple of others that actually could be used in different unique ways as well. Just as you can have one level of angle and one horizontal, you can actually have two levels of angle in your support and resistance level. You'll notice just as before, we've got 3 points of contact, so that allows us to draw a level of resistance. Doesn't necessarily matter what's causing this level to happen, but what's important is that it is happening. Something is causing this level of resistance to become significant, and it's important for us to be able to see and recognize where these levels are. So once this is touched 2 or 3 times, we can go ahead and draw a line and extend it out. And you can see that it's touched one more time before breaking above, just as before. Now our level of support is drawn on the bottom here. You don't necessarily always need a level of resistance and support together. Sometimes you'll only have a level of resistance or only have a level of support, which is completely fine. But when you have the both of them together, it narrows price to a certain angle or boxes in price at a certain level and gives you much more information based on which direction you should choose, when it's going to break out, how it's going to break out, and so forth. You can see here, if we continue on, Whenever this level of resistance is touched for the fourth time, it begins to go back down towards support. And then we once again had a situation where the market decided which direction it would head based on supply, demand, or whatever forces are driving it currently, news releases, and we actually get our breakout. Okay, so that would be a very, very strong trading opportunity. The breakout is a very strong, very useful trading opportunity for both resistance and support. But once again, we shouldn't ever delete our lines until the level of resistance or support switches roles, essentially. So extending this out after we've already had our trading opportunity here, and we continue, price pulls back to our levels, and here our level of support before finally gets broken, and it finally becomes a broken level of support. And look what this does. It travels through the level of support, bounces off our level of resistance, which becomes support, and moves back up to once again revert the level of support to resistance. So now we resist from this, continue down, and then we have yet another break here. So even with the different types of resistances and support levels that we have, you always want to keep them drawn on the chart until either price moves far enough away from it to where it becomes a moot point, basically, or price turns a level of support into resistance or a level of resistance into support. And the last thing I want to cover is a bit more of an advanced topic, but I think it's very important and it's extremely useful. A lot of people use what's called moving averages on their charts, for technical analysis purposes. They even have entire systems based around moving averages, buying and selling. And the thing I like about certain types of moving averages, especially exponential moving averages, is the fact that they could be what's called a moving level of support or resistance. Traditionally, support and resistance lines are either horizontal, or they follow the trend, or they follow a counter trend, just like the sloped ones that we were talking about before. But by using a moving average, it affords you a very interesting opportunity to be able to find what I like to call hidden levels of support and resistance that end up working very well. One of my favorite moving averages for the Euro USD is the 39 exponential moving average. Okay, and what this means is that we are calculating a line based on an average of the past 39 bars, and it's exponential, which means the more recent bars have a higher weight. And without getting into it too much, that basically means that the moving average will come to meet price much quicker than a standard moving average would. The reason why I like 39 so much, especially on the euro, is the way it moves. You can actually see on many occasions where it becomes a really nice level of resistance. As you can see, it touches it here, comes down to test it, doesn't break it. And then whenever it actually does break it, it's usually rather strong and begins to become a level of support. See? So as we travel down, we have another level of support. And just like drawing a line, the more times that this level is touched without breaking, the more significant it becomes. So we've got a breakthrough here. We have a very, very strong test of this moving average. It doesn't break. And then we continue down and do the exact same thing here. So this has been broken and tested two times for it to become a level of resistance. It's resisting price. And as it goes through it over on this side, not only does it create a trading opportunity, but we actually have it become a level of resistance again, or support, excuse me. So you'll see, just by the way that the Euro USD moves, and just by the nature of the 39 exponential moving average, which is one of my favorites, we actually have this as a floating level of support. It supports price as it moves higher. So it doesn't come down and touch it, but it tests this level on more than one occasion. So you have one here, and then you have a few here, and then it continues until we have a change in direction, and then it repeats the process all over again. So to recap, resistance and support is basically defined as any sort of level that price has a difficult time breaking through. Resistance means that it resists price, and support means that it supports price. It could do a number of things. You could actually use it to box in price, waiting for a breakout. You can use it to almost point toward a specific time that it's going to break out as price moves back and forth between a horizontal and a sloping line of support and resistance. You can have support and resistance lines that are both angled, and you can have lines that actually, like the moving average, or exponential moving average in this case, move with price and have a moving level of support that turn into a moving level of resistance that give you a very clear idea of where the market is going to test, where it's going to break, and for how long this thing is going to run in a specific direction. And let's remember that whenever you're drawing levels of support and resistance, try not to delete the lines until either the price has gone far enough away to create a new level, or it's gone far enough away to make it not as significant, or the line of support becomes a line of resistance, or the line of resistance becomes a line of support. Support and resistance levels are a tool that every trader that uses technical analysis should use and monitor. It gives you all sorts of information about what a price is going to do and how it's going to react to forces such as supply, demand, and fundamental things like news releases. In the next video, we're going to cover a little bit more in depth about this and cover what's called trends. See, trends use levels of resistance and support to define themselves and can actually be used to filter in what directions that you should be taking your trades.